All right. Hello. Good morning, everybody. Welcome to our morning market update and live trading session for Wednesday, August the 16th of 2017. I'm excited for today because another day and a beautiful life. Isn't life beautiful? You should be excited too. Key earnings from yesterday's session. Home Depot's down 2.7% with fears about online retail. The online retail sector is getting just pillaged and destroyed. Um, if you want to look for a trade on there, XRT is the ETF. You could buy put options on it. You might be a little bit late to the game, but the retail sector is bleeding out. I had an interesting graphic I pulled up today. I'll show it to the room the team in the room, our subscriber base, about the growth of Amazon versus the drop off in retail of all other sectors. Some companies are down as much as 40%. So really, the transition is on to some more online, some more newer model types of retail. Retail itself is dying. Let's be honest. I mean, I'm a guy that goes into the mall, and my biggest objective is to get out as quickly as possible. If I'm going in there, I know what I'm getting before I go there, and there's no moving around. I try to pick the laneway that's the quickest, usually close to the wall, and just hightail it in, get what I need, find the closest exit in GTFO. That's my retail shopping experience. So for me, Amazon's great, and I'm sure for a lot of you as well, it's becoming more convenient. So anyways, Home Depot got hit. TJX companies up almost 1% after lifting profit guidance. And in markets today, Asia, Japan started out at minus 0.1%. Hong Kong up a strong 0.9%. So Hong Kong rallies out of the gate. Let me see here. China is down 0.1%. India is up 1 whole percentage point. And in Europe, that momentum carries forward, but slightly reduced. London up 0.6%. Paris 1.1. That's the strongest market in Europe overnight. And Frankfurt up 0.8 percentage points. So a lot of strength, a lot of gains in Asia, and that spills over into Europe. Yesterday, somebody said, hey, the India market's closed. And I was getting quotes. And I want to tell you guys this much. When I call these markets out in these quotes, I really don't care about the actual market itself individually. The more so, what's important to me is the sentiment. Is the Asian sentiment bullish or bearish? Because now you get Asian bullish sentiment, you got European bullish sentiment, and your spill goes over into the U.S. session. Dow's up 0.2, S&P's up 0.2, Nasdaq's up 0.3. Crude is also up 0.3 to 47.69. Gold's down slightly, but holding some support. All right. That's all we need to know. There's a lot of buyers. There's been a lot of buying going on. We're at a resistance point in the equity markets. This is do or die today. Either the bears are going to push the price lower, or we're going to break these resistance levels and run some buy stops and make a trend towards the upper bound of the range. Okay, so that's a very important day today. Today we have mortgage applications. This morning we also had housing starts. Housing data this morning came out negative across the board, and it's not a good sign. The markets are cooling off and slowing down. In Toronto, it's the same thing. We have Canada's had some of the hottest housing markets in the last couple of years, including Vancouver. Toronto is now kind of the market that's led the way, but Vancouver is also back. Toronto slapped the 15% foreign buyer tax because there's a lot of hot money abroad that was driving prices up, and markets cooled down right away. Surprise, surprise. You make somebody pay 15% extra, and they don't buy anymore. So a lot of interesting things are happening here in the area locally with real estate, but also abroad. And housing starts this morning whiffed in the United States as well. All right, Atlanta's Fed business inflation expectation survey at 10 o'clock. 10:30, we have the Department of Energy crude oil inventory number. That's a big release. That's a great opportunity for us. Every week we trade that live in our room. Basically, we look at what the crude number is and we trade it based on what it means, what's happening, order flow, where some support levels are, and where the best opportunity lies at the end of the day. So if you want to trade crude oil with us, you got time. Sign up today and join and hop into the trading room. 2 p.m. we have the FOMC meeting minutes. This is from the Federal Reserve. We'll talk about that in a second. All right. Today, Mexico, Canada, and U.S. kick off a first round of talks to revamp and change NAFTA. All right. There's going to be, the timeline is for 7 rounds of negotiations between now and the beginning of next year. So the next couple months, they're going to have 7 different negotiation rounds to hash out changes in the NAFTA deal. A little bit of an ambitious deal, but I like ambition. I like hard work, and I love optimism like that. You can't really fight that. All right, U.S., Canada, Mexico trade has quadrupled since NAFTA took effect in 1994, surpassing $1.2 trillion in 2016. So there's a significant amount of trade here, and there's a lot on the line for a lot of the countries. It's not just the U.S. being taken advantage of here. It's actually probably quite similar to the vice versa, the direct opposite of that. Canada and Mexico stand to lose probably more from this. All right. There's a big event, 2 p.m. The Fed set to release its meeting minutes from the meeting that they met. How many times can I say meeting? From the meeting that took place in July. All right. So these meeting minutes are going to show what these FOMC participants talked about in that meeting. Here's what you have to watch for. They decided last time unanimously, so not one person voted to increase rates. So they've stopped the interest rate hike. We've had 4 consecutive hikes. There's a 4 consecutive hikes. It's gone up 1 percentage point on interest rates, and we're starting to see that kind of curtail, taper off, and slow down. So they're not going to raise rates this year, I think, anymore. Personally, they could in December, but I think that's off the table at this point. They've raised rates as much as they wanted to, and now they're going to sit there and watch some more data for guidance. One moment, I just got to fill. No, I got to fill on something, and that kind of scared me because I don't have any orders in the market. I love that fill sound when I didn't put any orders in the market. That means a mistake happened. All right, so that's what the Fed's talking about. They're also going to give us hopefully some more insight onto the unwind of the $4.5 trillion balance sheet. That's what all traders are fixated on at this point. Traders don't care as much on the fact that they're not raising rates or they're raising rates because the rate hikes, we know that we're in a rate hike cycle, right? If you ask somebody, hey, are the rates going up or down in the United States? Most of the people know we're going up. So therefore, the pace at which we go up, yes, it's important. Yes, are we going to see a December rate hike? We're looking at that in the meeting minutes. Yes, 2018, what will that look like? What's the language that's used? But what's more important is the event that's right ahead of us. Are you going to start to wind down the balance sheet before the end of this year? If you do start to wind down the balance sheet, there's going to be a lot of sale of MBS, mortgage-backed securities, and treasuries. All right, and a lot of you don't know this, but about 30 to 40% of all cash flow out from interest payments from the Fed to banks that put their deposits on the books or on loan goes out to foreign banks. So that money's flowing out of the United States and going to foreign banks that have invested. So it's an interesting dynamic here, what's going on. That balance sheet has to eventually get unwound for the Federal Reserve to be able to continue to pay interest rates. Because, look, here's what's happened. A lot of money has been sort of printed and circulated in the economy, and the Federal Reserve is struggling to take that money back. This is extra cash that was provided in the name of saving the economy in 2009 after the crash, but they're having one heck of a time taking that money back. When you pull money out of the economy, you put a lot of a lot of pressure on the shoulders of growth. You're going to take away from growth in the economy. You're going to start to influence banks and their lending decisions. You're going to have to make them recapitalize, which triggers off a whole set of events that could end up causing some downside in the market. So be careful. Watch very closely what they say, because William Dudley on the Federal Reserve, he's the Bank of New York president. Bank of New York president's got a permanent seat as a voter in the FOMC. So Dudley was saying we might need one more rate hike in December. All right, if that's the case, if a lot of participants agreed in the language of that statement, we need one more rate hike in December, we could see a little bit of a bearish tone in the equity market as it prices to adjust that in there. But it's a known factor, right? At this point, we know the rates are going up. Nobody's shocked. Nobody's surprised. The question is how fast and how far. And if that comes in a little bit more, if we get some more details on that, you can expect to see some shuffling in the market. But I don't think this FOMC meeting minutes is going to be a huge event, as it typically has been, right? Remember when they were first getting ready to hike? Every FOMC statement was everyone's on pins and needles waiting for it, waiting to trade it, because at any moment they could announce new language that changed the tone of what they were doing for 7 years. So that's a big thing. Now that they're just kind of continuing with it, it's not that big of a thing. Don't panic. All right, API weekly oil inventories came out yesterday at 4:35 p.m. That's a private release. But here were the numbers. Minus 9.2 million barrels. That's a big draw of crude storage inventory. Minus 7.84 prior. So it's telling you there's more barrels coming out of storage, which is less supply or more demand. We know there isn't more demand, so they're cutting supply based on the OPEC production deal. That's good. That should be bullish for oil. So this big draw right now in crude oil inventories is just holding the price from dropping more. I wouldn't call this a bullish event, but I would call this a pause. It's going to probably rotate around here, spend 2 to 3 days in a bit of a range, and it could rally about 60, 70 cents today. In fact, my resistance for oil is at $48.48. So 48.48 is the upside. We'll see what we get on this Department of Energy report today at 10:30. Very important. If we get another draw, we might get a rally all the way up to 48.48. We might even break that and go a little bit higher. So we got a little bit of a bullish skew in oil prices through the next 1 to 2 days because of oil inventories, but that depends on this morning at 10:30. Very important oil inventory number, and we're going to trade it as a group. All right, gasoline had a bit of a build, but that's not a surprise. We'll talk about that in the trading room, guys. Around 10:15, we'll set up the trade. There's going to be a great opportunity today. All right, let's finish out some levels. Today's support at gold is $12, $1,200.70.10. All right, so 12.70.10 is support on gold. If it goes down to $12, you got big problems. All right, US dollar support levels 93.70. I've told you guys for days now, for maybe even weeks, gold or the US dollar is going up to 96. Okay, it's going up to 96. There's a lot of shorts on the US dollar. They're going to get their head squeezed. They're feeling the pinch right now. There's more upside. Buy stops are coming out in a big way in the next couple of days. So long the dollar is a good trade. Selling any currency pair against it is also a good trade, especially commodity-driven currency. So sell the Canadian dollar, all right, buy the US. That could be a good pair trade. Again, do your own research. Don't listen to the guy on YouTube and put your money into that. That's the silliest thing I've ever heard. All right, resistance on oil 48.48, S&P 500 resistance 24.76.25. Russell 2000 or the IWM ETF that tracks the Russell 2000 leads the way lower on the market. It's been weaker than all other markets. Dow Transports also continues to be weaker, but it's popped a little bit in the last few days along with the S&P. So watch those two correlations. Watch IWM to see which way it goes. Watch your Dow Transports, Dow T, and then watch FANG, FAANG, for some direction and cues as to the next move. We've dropped a lot on fears of North Korea. We've rebounded on less fears of North Korea. Now we're at a pivotal area. Do we run buy stops, or do we start to hit the bids and slam the price lower to and through the lows? So that's what I got for you guys. I hope you enjoyed today's session. Just looking through the notes to make sure I didn't miss anything. I didn't miss anything. 10:30, oil numbers, 2 p.m., FOMC statement. You're going to have a lot of trading opportunities today. Today's the type of day you come in, you hit your target, you high-five yourself in your office, and you go do something else. Okay, yesterday we said we were bullish in the equity market. What ended up actually happening in the trading room early on into the open, we saw a lot of weakness, so we shorted the market. So I can't tell you where it's going to go. I could teach you how to see where it's going and how to predict the next couple points of a move and when to get in and how to time a trade, but I can't tell you where it's going. Nobody can. All right, I don't know myself. I watch the market and I jump on board wherever I see strength. Yesterday, the strength early on the session was the downside. We shorted the market and we were done. We met our profit target within 20 minutes of the trading day. So literally, you could have walked away at 10 a.m., worked for 30 minutes, and had a full day of income. All right, guys, take care. Have yourself a great day. I'll see you tomorrow at 9 a.m. Tomorrow's Thursday. We have one more webinar for the week. Heck, we'll do Friday as well. So see you tomorrow. Good luck, good trading. Manage your risk. Be very careful out there today. And expect some sideways chop, but be prepared for volatility to come out. All right, we're getting there. It's that time of the summer market where volatility starts to come back. And if you're doing bad trading slow markets, or if you're doing good trading slow markets and you do bad trading fast markets, that means you're not ready to trade live yet. You should pause and do some demo trading, because fast markets is what makes you fast money. Traders love and thrive on fast markets. You don't want chop. Choppy, sloppy is tough to trade. Movement is where the opportunity is at. You guys take care. Have yourselves a great day. I'll see you tomorrow at 9 a.m. Trade Pro Room, give me a second. Let me just do my patented spin here. Let me spin out of my YouTube broadcast and let's open up the room. Can you guys see the screen? Just want to do a quick check and then we'll get started. Let's talk about oil. Let's talk about the events and levels driving the day.